Now, in this video, I'm going to talk to you about the big bonuses that bankers typically receive when they're working in the corporate environment. And you can see from some of the numbers on your screen, average bonuses can be incredibly high, over six figures for quants. We're going to go through all the details in a moment. But if you're sick of living month to month, struggling, you want to enter the finance industry, you want to get the high six-figure bonuses, this is something I can teach you to do right through getting high-paying jobs, climbing the corporate ladder, building an income that actually frees you. This is something I've done for over 10 years within the finance industry. You can see here from my experience working at Goldman, Morgan Stanley, other top banks, successful applications to JP Morgan, KPMG, Arrowgrass, hedge funds, private equity firms, all these type of things. Link in description if you want to learn more. I will really help you take your career to the next level. So we've got this article here about big bonuses this year in 2025. Let's go through some of the statistics and see what's actually going on. Now, what we can see this year is quite interesting because the average bonus has gone up dramatically for people who work in hedge funds. The average bonus is around 450,000 US dollars. The average bonus change is plus 48% compared to previous years. So almost a 50% increase in the bonus that they get, right? Hedge funds typically pay big because they make big money. The people earning the cash take calculated high stakes risks. But when those risks tend to hit, the rewards can be massive, right? It's a much more of a risky career. I think the key thing in the difference between how hedge funds get paid versus banks is that if you're a trader at a bank, you typically get paid 5%. Your bonus will be like 5% of the overall profit you're going to make for the bank. But when you work for a hedge fund and you're a portfolio manager, you're a big fish in a small pond, right? So if you're a successful trader, successful portfolio manager at a hedge fund, you're going to make a lot more money compared to if you're doing the same role at a major bank. So that's kind of interesting to consider. If you want to take the higher risk of working within a hedge fund compared to another bank, that's something where you can have a lot of reward in terms of the financial outcomes you could have for yourself. Now, apart from that, private equity, again, small, efficient finance firms taking more risk, higher risk, higher reward, and they have quite large bonuses that are increasing, 46% increase in their bonus level. And then you've got other roles here, sales and trading. They have a 33% increase in the bonuses they're getting. Their overall average bonus is around 190K. So these are the type of things worthwhile considering. Do you want to go for hedge funds? Do you want to go for private equity firms? Also, sales and trading. Of course, that's what everyone talks about typically, that they're working on a trading floor for a major investment bank. That's another option obviously available to you. So it's worthwhile considering what you want to do. Another thing would be commodities. If you want to work as a commodity sales or trader, you can see the bonuses have gone up almost 40%. The average total compensation is 220K. So it's kind of high numbers. Just look at some of the average compensation here. Hedge funds, 630K annual salary. Private equity, 220K roughly. Commodities, 220K. Sales and trading will be 380K. So there's incredibly high salaries that you could get within the finance industry. And typically recently, when you've seen instability in the stock market, commodity traders have been a hot topic. When there's instability in the equities, people want to invest in commodities, gold, agricultural, energy. And that's why they're quite high up when it comes to bonuses in recent years. So these are the type of things worthwhile considering. Where do you want to work? How much money do you want to make? And what actually matches your personality? Something I want to cover next is that it's not always a good rosy picture. You can see another company we're going to go through here, which is an independent investment bank, Centerview. Actually, the partners, the people at the top of this small investment bank, has gone up in terms of their pay. It's gone up 20%. But for the rest of their employees, it's gone down 40%. So it's kind of a rough story. Let's try to learn from it here. Here's a quick image of their company sites. You learn a bit about them. It's an independent investment bank founded in 2006. They advise for over $4 trillion worth of deals. Recently, they did a $11 billion sale they organized for Pfizer. They have about 500 employees. Typically pay quite well. They have offices in New York, London, San Francisco, Paris, all these type of places. And they're known for having quite a tight team culture. They work on M&A, mergers and acquisitions, restructuring, strategic advisory, like that. So they're kind of a very broad company and they do a bunch of interesting work, but their company culture leaves much to be. So if we go back to the article here, we can learn a bit more. So what it says here, and this really demonstrates how the rich get richer and the middle class, or the people who are working in finance sometimes, not the senior levels, and might struggle to climb the actual wealth ladder and the corporate ladder. So it's a boutique investment bank called Centerview. They've been having quite a good time recently. Their headline figures are up, right? Their revenue was up 6% year on year. Operating profits was up 21%, which is significant, right? The good news is that it has created higher pay, but only for the people at the top, right? The bank's top members, right? So the top 8 employees have got a high pay of about $6.9 million or $8.7 million roughly, right? Or 6.9 million pounds, $8 million, let's just say that, right? And this is quite high, right? So that's a 22% increase on previous years. So their pay's gone up 22% from about 7 million to 8 million. So quite a lot of increase in pay, right? But the bad news is this didn't benefit all the other employees. It cut expenses elsewhere. Wages and salaries for the normal employees fell 32%. So on one hand, the top 8 or so employees or partners had their pay go up 22%. At the same time, the employees at the rest of the company had their pay go down 30%. That's a significant thing, right? And it's not like they hired a bunch of new employees, so they didn't have the budget. It shows they only hired 4 more employees. There are total employees at this particular office had gone up from 53 to 57, but they still cut their pay of the average salary of their employees by 30%. So I'm sure a lot of people there working there are quite angry, right? I mean, typically average overall, the pay is other office jobs. Average pay per head for the boutique staff was quite high, around $500,000 basically. So basically says from the pay went down from 520,000 US dollars for the staff member down to 320,000 US dollars. So it's gone down. It's still a significant amount compared to other jobs, of course, but I'm sure they're stressed, overworked, working all the time. But the difference there is they've been able to effectively really create a skewed situation where the rich are getting richer and the poor are or the class are staying the same, right? The pay cut is probably a tough pill to swallow. It can feel like you're being overworked, and it's kind of a common feeling that you see in some of these jobs. A few people at the top typically benefit, and you get the crumbs they sweep off the table. It's not just what we see in broader society with the growing inequality, but within companies is kind of awkward. You see the bank is making 21% more profit, more operating profit. The pay up the senior management, and your pay goes down about 30%. So it's a bit crazy for you to adjust and manage your income. So there's the guy, that's the CEO of that particular company, Blair Efron at Centerview Partners, if you ever see him on the media. So there's another story that shows you how mixed this image is, right? We talked about the high amounts at the start with the bonuses, but here we've got a case in Hong Kong where they are accepting a 40% pay cut to stay in the industry, right? So these are the type of challenges that actually do occur, right? There's real challenges for mid-level bankers. It goes through this here. Global banks like UBS and BNP Paribas attracted hundreds of bankers from domestic and Chinese banks, right, over the last decade, paying managing directors around 500,000 US dollars. That's compared to no more than 300K at like China International Capital Corp, right? And what he's trying to say here essentially is that what you have people who lost their jobs at these big banks, UBS and BNP, and what they had to do, they're working in Hong Kong and China essentially, they have to go and work for the local Chinese bank. So they have to take a massive pay cut. Their pay cut goes down from their pay goes from 500,000 US dollars to 300,000 US dollars. So they take a pay cut of 200,000 US dollars just to stay in the industry because international banks are making massive job cuts. Some of the people have to go for those smaller local banks. So it's a bit like going from working, if you're in the UK, it's a bit like going from working at Goldman Sachs to working at NatWest, right? A smaller bank. In the US, it's like going from working at JP Morgan Chase to like a smaller local bank, right? So it's kind of a massive pay cut that some of these guys are taking to stay in the industry. And this is the type of flexibility you need to have. And it's the type of things I teach throughout my coaching program, is where you have to be aware of the instability that can come. You could have like a 5 to 10 year run where you're making a ton of money, getting paid 500,000 US dollars a year, and then all of a sudden you take a dip and then you have to take a massive pay cut. That's why you have to avoid lifestyle inflation, invest as much as you can, have a decent standard of living, but not overdo it, point where you think you're going to be on 500,000 US dollars for the rest of your rest of your working life, right? That is here. Unfortunately, the advice in this situation is to swallow your pride, tighten your belt, and be happy that you've gone from at least a major international investment bank like UBS to a small investment bank, which is local, the Chinese International Capital Corp. Now, the point here is that, you know, if you lose your job at a big bank, what you're going to do, you don't have many options. You go to a smaller local bank, or you can leave and go to another industry, maybe go from a high-paying finance career to a high-paying tech career. But obviously that's less common, and there's, you know, you might have to develop a whole new skill in terms of understanding the tech industry. So people have to make these type of adjustments. It's never that easy. Now, here's the final story. We're looking at the CEO of Jefferies, which is a global investment bank here. Jefferies is a global investment bank founded in New York. They've got 30 offices worldwide: London, New York, Hong Kong. They have about 7,000 to 8,000 people working for them. They cover capital markets like sales and trading, mergers and acquisitions, research, asset management. They recently did an $18 billion deal with Home Depot. So they're kind of aggressive, lean, expanding into new markets. So if we go back to the article, let's see the difficulties they're having. Here we see Jefferies, right? Jefferies management team have admitted they can do things better. Revenues are down 8%. Earnings are down 15%. And then it says here, the uncertainties have crept in the last 8 to 10 dissipated. And we don't have much as confidence and visibility in terms of our positivity about the of our bank. Jefferies has been on a recruitment drive like a few others in the last 5 years. They've hired many managing directors. So a lot of middle management or senior middle management has increased. They've by about 70%. So that's a lot. So they've hired a lot more middle and senior management. But at the same time, their revenues are going down 8% or 15% down in their earnings. So they have to consider, right, how many people can they expect to hire when their money or their bank isn't as profitable as it used to be. So here it says here, at this point, people in North America may end up facing the same painful questions as the Hong Kongers have had to deal with. The point there is that, you know, many people think, oh, like I said, I'll be on a high paying salary forever. There won't be a downturn in the market. If there is a downturn, maybe my bonus will be small for 1 year, but next year my bonus will go up. But that's the thing, it's not as flexible, it's not as consistent as you think it might be. Of course, like I say, you want to be making these bounce. You know, you want your average compensation to be 500,000, 600K. Jefferies, who might be making job cuts, you need to plan for the length of your career. So when you do get those big bonuses, you are investing them, right? If I'm sure some of these guys are smart, right? Maybe some of the guys who are in trading, they have to maintain the lifestyle aspects of their job. So they might be spending expensive watches. They might be buying expensive houses, expensive cars. They might want to impress their wives, their trophy, their paid for wives. Let's just put it that way. Or they have to impress their clients that they go out to on client dinners. So they have to wear their Richard Mille dollar watch, things like that. But I'm convinced that some of the guys who maybe work in tech, who have overall compensation of about 220K, quants who are like the investment analyst idea kind of guys who are kind of more technical rather than more outgoing, they're making about 300K. The other jobs, I'm sure they can keep a low profile. They'll be investing aggressively. So imagine you work in, let's just say you work in operations, right? Let's just say you're making at a lower end, right? You're the lower end of the finance industry. You're making 140,000 US dollars. You keep your living cost to quite low as you can, and you invest maybe a year, right? That's still a decent. Invest 50,000 a year into Bitcoin, and then you can imagine the amount of profit you'd make after 5 years, right? If it goes through a cycle, 5 to 6 years. These are simple things worthwhile considering. What type of job do you want to go for? How much money do you want to make? What matches your personality type? No point just going for a high paying job because you want to make a lot of money. If you're not skilled in that level, in that competitive environment, you're going to get kicked out. You're going to deal with a layoff. So high risk, high reward. I have 10 years experience in the finance industry, working in these type of roles, sales and trading, investment banking type of roles. I have career coaching. I will really help you secure that high paying job that you're looking for. And if you're tired of seeing guys who are making tons of more money than you and they're not necessarily the smartest, you think you can do what they're doing, you'll be able to kind of follow my steps into that finance career and earn a lot more money, breaking into high paying income that actually frees you. And I know how to do this because I've done it myself, like I say, for over a decade. So also there is a free email newsletter in the link in description. If you just click on that, and I'll be able to help you twice a week with tons of helpful emails on how you can actually grow in your career. So thanks for listening. Recommended videos on your screen right now, and I'll see you next time.